All right, hey everybody, this is John, and welcome to the free video. So we had the CPI come out today higher than expected at 7.5%. Bullard came out and said, we need to hike rates by 1%. And although initially the markets gapped down, they gapped down pretty hard at the CPI numbers, they actually filled their gaps, or mostly filled their gaps. And then Bullard came out and said, we need 1% rate hikes, and we need to get this show on the road, including most likely doing an intermittent rate hike, meaning doing one just out of the blue. And so markets cratered, bonds cratered, and then this is the interest rate of the 10-year note. You can see that not that long ago it was at 1.2%, and it's almost up 100% from August. And so how you read this is it looks like, oh my gosh, it's up $1. No, it's so 20.31 just moved the decimal one, so it's 2.031%. So this is the first time it's been back up above 2%. Geez, since July of 2019. So, and then of course you can see that was the crater for down to about 0.5% during COVID, and now here we are. So you've got mortgage rates spiking. The market is trying to digest all this, and the question, of course, is like, okay, well, what happens now? Is it a given that the markets crash from here? Well, so one thing to keep in mind is that when the history of the markets and interest rate hikes, and of course we do have balance sheet reduction coming too, is that once they start talking about it, the markets correct 20%. That's already happened. After the rates actually start hiking, the market actually starts to trend higher. Now, is that what's going to happen this time? Not, of course, I don't know exactly. I always just, I play the signals as they come up. But the main thing I want to point out is that the idea of assuming that the market is just going to crater from here, you want to be careful with. This kind of smells like a bear trap. I could be dead wrong on this. But the idea here is that if we look at the structure of what's happened, we're just kind of sitting here at the 50% retracement level from the swing high to the swing low. I personally don't think we're going to make new highs anytime soon, but I think the idea that because of the CPI and what Bullard said that we just go straight down, the market's pretty smart about pricing things in. That's why bonds have been heading lower and stuff like that too. I think the most interesting scenario here, and because the market is diabolical, is that we come up, we actually take out these highs, run stops to the short side on both the S&Ps and the Qs, and we can take a look at the Qs here as well, which is more pronounced, and then we roll over and see some serious selling. Now, is that what's going to happen? See the NASDAQ right here? Where we actually kind of push one more push up above there, rip the faces out of the short side. And the other reason I am looking for this too is that just this huge head and shoulders pattern that's setting up you can see it more clearly on the weekly chart. And if you look at this, here's the shoulder, here's the head, and if we can rally up to 382-ish, that would form a perfect monster head and shoulders. Now, obviously, the market's going to do whatever it wants. Maybe this thing's ready to go, and it's not going to play out the scenario that I want. But that would be a nice diabolical move. Would be to like rip the faces off all the shorts, come back up here, get everybody hope. We form this the mother of all head and shoulders tops, and then we roll over and die. So we'll see. The last thing to keep in mind is that Thursday, which is today, the Thursday before monthly expirations next week, typically is a down day. It's known as kind of the pit bull low. And so that may have had something to play with it too. So long story short, a little bit of hurry up and wait for Friday. I wouldn't just assume that the market craters from here because the market's very good about pricing this stuff in. In a perfect world, we do end up kind of gaining our footing. We rally into the end of next week, and then we roll over and die. So that's what I'm looking for. Hope it helps. You guys have a good one, and we'll see you at the next update.
Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.